Just because you become a cosigner does not mean that you will own or have any partial ownership in the vehicle, the house, or whatever else you are cosigning for. It does mean, though, that you are taking on full financial responsibility and promising to pay the loan back in full.
It's not something to take lightly.
Nope, not something to take lightly.
You're listening to the Isn't That Rich podcast, and we're your hosts, Jill Franks
and Ashley McVicker. As young females in the banking industry, we love simplifying the confusing yet everyday questions you have about money.
Like, how do I get my finances in order?
Where is my money really going?
How do I invest for my future?
How do I make my money work for me?
Can I really afford to buy that new home?
These are the questions that keep us up at night. And the truth is, no one was born knowing how to handle their finances.
And chances are, walking into a bank to ask for help seems intimidating.
Whether you're a single person in your early 20s saving for your first home,
or you're an empty nester wondering what to do with that extra spending cash,
this is the podcast for you. Welcome back to another episode of the Isn't That Rich podcast. Today we are tackling a topic that I think a lot of people don't talk about enough or don't understand enough, and that is what it means to be a cosigner on a loan.
Yeah. Ashley, have you ever asked somebody to co-sign on a loan for you, or have you ever been asked?
Yes, I have asked someone to be a cosigner on a loan for me, and that was my dad when I bought my first car.
Yeah, and many people out there do ask family members to be a cosigner on a loan, or even friends may ask you to be a cosigner on a loan.
So when I asked my dad to be a cosigner on the loan for him, first of all, I didn't even know I needed to do that until I was at the car dealership. But you think it's just kind of a blessing, is what it feels like. Yeah, they can have the loan. They're good for the money. That's what you think this signature means, but it's not. No. And we have a lot of information to give to everybody today about what it means to be a cosigner on a loan, because it's a lot bigger deal than you think it is.
Yes, and so you asked your dad to cosign on your car, and was it your first car that you bought?
They bought my first car, but this is the first car that I bought on my own when I was in college, because I needed a new car and they said, you have to buy your car. But I didn't have any credit history, which what we know from our old episodes is if you're a credit ghost like I was, typically you have to have a cosigner, somebody with a credit history to prove that you can pay this loan back.
Right. And that's what happens with a lot of people. You know, a lot of family members or friends may ask you to cosign on a loan for them. And what we're going to talk about today is not many people realize the implications of being a cosigner. And it's something you really shouldn't take lightly. It's something you shouldn't do unless you completely understand what it means.
Yeah, it can turn into a major financial mistake for you, or it can be a blessing to somebody else. Yeah. And in some cases it is, but in other cases, it can seriously cause some financial distress.
Yeah, and we hear stories all the time at the bank from people who have had their credit just wrecked because they've been stuck paying for another person's loan.
Right.
Yeah, and it's ruins relationships. So all of this can happen with cosigning a loan. So no matter how well you think you know somebody, mixing money and relationships can change things.
Say it again.
Yeah, it just can change things.
Absolutely. It may seem very innocent at the time. You're just helping out a friend or a relative get a loan, and that's all good and well. But becoming a cosigner is a serious financial decision that you need to think seriously about and learn about before you actually sign that piece of paper.
So as a cosigner, what's actually happening is that you are taking on full responsibility for the debt if the original applicant is unable to pay. And that happens more often than not.
Yeah. That sounds so yucky, though.
I know.
Who wants to do that? But people have to do it for people.
Yeah. So let's talk about statistics with this, because I want to get really down to it, because this happens more than you think. For example, I went on creditcards.com and I looked up some statistics, and did you know that 38% of cosigners had to pay some or all of a loan they cosigned for because the primary borrower failed to pay
38%.
38%. That's a huge percent of cosigners.
So that you're saying if that's you, I bought a house. Let's say I bought a house. Jill was my cosigner. I just said, screw it. I'm not paying the mortgage anymore. That means that you had to finish paying off my mortgage.
That means immediately the first payment that you miss, I'm responsible for paying that.
Yeah. And I think a lot of people that cosign loans don't think about this part of it.
Right.
And that's like the biggest part of it. That's your primary responsibility in this agreement, is that you're going to pay for something if the primary applicant doesn't pay for it.
No.
How mad would you be?
Oh my goodness. And we'll get more into it.
Yeah.
But how do you even know that payment's not made?
I don't. Oh, Jill, let's get into more statistics. Okay, guys. So 28% of cosigners saw a drop in their credit score because the person that they cosigned the loan for skipped a payment.
And we know that a skip payment has a really large implication on our credit
It's going to ding your credit.
Yeah. And so I'm your cosigner on this loan. You forget to make your payment and my credit gets affected. 28%.
Looks like I'm the bad guy in this episode. We're just going to keep picking on me.
So the next statistic, did you know 26% of cosigners said that cosigning damaged the relationship they had with the cosignee?
I can only imagine if I had to pay for something that I'm not even going to have ownership in.
Yeah.
Wow. All right. 90% of private student loan borrowers who applied for cosigner release, which means just saying, I don't want to be on this loan anymore. I don't want to be responsible for it. They got rejected. 90% of those. 90%. That's like almost 100%, guys.
Okay, so I want to explain what this means. Yeah. So you are a student, or I'll be the bad guy here, Ashley. So I'm the student. I take out this loan, and all of a sudden I have my career. I'm able to make my payments on my student loans. We go to the bank and we ask for you, my cosigner, to be released from this loan because I'm responsible.
You've got a job now.
I got a job. I can make that $300 payment a month, whatever. The lender has the final say. And it says here that 90% of those lenders will say no to releasing you, the cosigner, from my loan, even though I'm able to make it.
And you would say the 90%, this is more specified for private student loan borrowers.
And this is for student loan borrowers.
Okay. So it's not just like a mortgage or a car. It's like.
And I didn't see that information on this creditcards.com, but I did see this about the student loan. So
wow.
Crazy, right? So you're on the hook.
You're on the hook.
As long as it takes me to finish paying off that loan.
That would make me so nervous. So those are some startling statistics.
Yeah. So it makes you think twice about being a cosigner.
So who's finding cosigners for loans? And I talked about this at the beginning. My dad was my cosigner. And so right here it says 45% of cosigners are parents for their children or their stepchildren.
Yeah.
And then 21% of cosigners are cosigning for a friend.
Right.
Would you cosign for a friend? I don't think I would.
I don't know.
I would cosign for my child.
I think I have one friend I would cosign for.
Because you know that they're going to pay their stuff back.
Yeah.
Hopefully. Yeah. And then the rest is just a mixture of people cosigning for their spouses or their partners or their parents even.
Yeah, things like that. So let's talk about the things you can consider before you agree to cosign on a loan.
And it's a lot.
There's a lot.
It's a lot to think about.
Yeah.
And the first thing you need to think about is just what is a cosigner? Yeah. So a cosigner is someone who agrees to the terms of the loan with another person so that person is more likely to be approved. A cosigner is also legally responsible for all the payments and any missed payments that will appear on the credit report as well as on the cosigners.
Yeah. So you miss a payment, it's going on my credit report as well as yours if you're a cosigner. So I think it's a really good time to mention this because there are two different things or way to get help with a loan, so to say. One is a cosigner and one is a guarantor. So you can have a guarantor on your loan and you can have a cosigner. So a cosigner takes responsibility for that loan from day one. The loan is signed, you sign the documents, that loan is your loan too. Now, a cosigner is only liable to make the payments should the primary borrower not be able to make those payments or refuses to make those payments. So they don't have as big of a responsibility at first or for the full length of the loan. It's only when there's that default. So.
And a guarantor is different.
Guarantor is different. Yeah.
And I like that word.
Guarantor. Yeah.
So a cosigner may be needed for different things, such as a car loan, a mortgage, a student loan, an apartment, even any other type of rental house.
You don't think of that, but I remember my first apartment in college. I'd have my dad sign my lease with me because
Me too.
I didn't have record. But if I wouldn't have been able to pay my rent, my dad would have been on the hook for that. He would have been responsible for making that payment.
Well, yeah. Well, I moved to Kentucky and
Sure.
I didn't have a job yet. And so I didn't have proof of employment. So my dad was on the hook again. Poor guy. My mom never went on the hook for some reason. We can talk about that later. But
Funny how that works, isn't it?
So yeah, the first thing before you consider co-signing on a loan is just deciding like
What is it?
what the heck is a co-signer?
Making sure you're
This is
clear.
who I am.
Yeah.
Yes. So Jill, when would someone need to co-sign?
So I like to think of this example, and we talked about it. So you're buying your child a car. They want to buy a car, and they don't have a long enough credit history to be approved for the car loan.
Credit ghost.
Yep. So your child may ask you to co-sign their loan for them. And it happens the same way as if you were doing the loan. The credit or the lender is going to take your credit score, all your financial information into account, and then this information is going to help improve your child's chances of being approved for the loan because they're looking at your ability to repay.
Yeah. And not only would you need a co-signer if you don't have credit at all, like maybe a 16-year-old child, but if somebody doesn't have great credit.
Yeah.
So if you're the bad guy again, if you have a 450 credit score and I have an 800, I mean, that's wild differences. But maybe you would ask me to co-sign because I kind of have more skin in the game.
Yeah.
I'm like, hey, I can pay stuff back.
Yeah.
Here you go.
Right.
You're kind of borrowing my credit.
You're
is really what
leveraging. I'm
doing.
leveraging you, right?
Yeah. So it's not just for somebody that doesn't have credit. It's also for someone who doesn't have great credit.
Yeah. Or, you might be able to you might be able to borrow more money than I am able to. And so I can use you to get me a bigger loan.
Yeah.
As a cosigner, you agree to pay off the entire amount of debt of the original borrower is unable to pay it in the future. Even if the original borrower doesn't pay a penny, the cosigner would have to make all the payments or risk being sued or having credit report damage, even more.
And it's just crazy because this isn't, you didn't want to buy whatever this person was taking the loan
Right.
on.
And you never receive
ownership, and we'll talk
ownership.
about that. But
Right. So in the example of the parent helping the child or being responsible for the child's car. So if the child no longer makes the payment or just for some reason won't make the payment, you as the parent would be responsible for that car payment.
Yeah. And like we said earlier, 38% of co-signers had to pay some or all of the loan that somebody defaulted on,
Right.
that they co-signed for. So even in some circumstances, the borrower, the original applicant, may file for bankruptcy,
Yeah.
but then the co-signer may still be on the hook for paying that back.
So that just doesn't go away because the original borrower filed for bankruptcy.
Nothing's ever free.
No. So they might be in bankruptcy. They get a clean slate, whatever happens. This goes on their record for 7 years. You as that co-signer are still on that hook for that original loan. Like that doesn't go away just because the other person filed for bankruptcy.
And I wonder if you can file for bankruptcy as the co-signer.
It might cause you to go into default.
Yeah.
Because what if you can't make that payment? And we'll get into that more. But if you are agreeing to be a co-signer and you can't make a payment on that loan that you're co-signing for, might think twice before agreeing to do it. So circumstances change. And so it's important to be able to pay for that as circumstances change. So how does becoming a co-signer work, Ashley?
So here's what happens when you agree to become a co-signer for a friend or a family member. You will start by giving all of your personal information to the bank or the lender. This is information like your bank statements, your pay stubs, tax information,
returns.
tax
Yeah.
returns, yes,
Yeah.
all those good things. And you'll also have to complete a loan application just like the borrower.
Right. So you're both doing a full application, giving all your financials.
Yes.
Okay.
And then you do that beautiful signature on it and say, I'm going to pay for this if they don't. But here's the kicker, and we've already mentioned this a few times. Just because you become a cosigner does not mean that you will own or have any partial ownership in the vehicle, the house, or whatever else you are cosigning for. It does mean, though, that you are taking on full financial responsibility and promising to pay the loan back in full.
Yeah. It's not something to take lightly.
Nope, not something to take lightly.
Is it bad to become a cosigner? Because it sounds kind of complicated and something I don't want to do after hearing this. Is it bad?
I don't think it's a bad thing, but it can be a bad thing, just like all things. You know, you ever heard the phrase, too much of a good thing is, what is that phrase?
I don't know, but I've got like the double mint commercial too. If a good thing is better than one. No, but that does not apply in cosigning. So I think the biggest implication of being a cosigner is the effect it has on your credit. Mm-hmm. So if the person doesn't pay the monthly payment on time, then you might be rejected for a loan in the future because of your credit score. It can damage your credit score and stay on your credit report for a long time.
Right. And what you just said, Jill, is like, okay, I cosign on a loan for you. You trash it, and then I want to go buy my dream house, and the bank says, sorry, no, remember when you co-signed on this loan for Jill Franks, and she totally ran away to the Bahamas and didn't pay it? Yeah, we just can't. Looking at your paperwork, we can't trust you. We may trust you personally, but according to this, bad loan.
Yeah. And when you're applying for a loan, one of the things they also look at is your debt to income ratio. Mm-hmm. So if you have a high debt to what your income, so if you co-sign on a loan, that's taking up a majority of your debt that you're eligible for.
Right.
So I helped you out with your home. Now I'm on your hook for your loan. It's showing my lender when I'm applying for my own home that I already have this huge loan out. So I might not have enough credit available to buy my own house.
It looks like you're overextended financially.
Exactly.
Is what it looks like on paper.
Yeah.
Because it is. Because if they default, you have to pay it.
Yeah.
And so the lender's like, what if you have to pay this and then you have to pay this?
Yeah.
I don't think you can pay us back.
Right. It might look like you have too much debt on your plate, essentially. Mm-hmm. So they're not going to give you more debt. So if you're thinking about buying something that will need financing soon, like your house or your car or anything like that, think twice, think long and hard before you decide to co-sign on someone else's loan.
It's obviously you should think about being a cosigner for the rest of your life, whether you should do it or not. But I think too, it's a good time to know if you are about to make a big financial decision, like buying something for yourself, taking out a loan for a mortgage or a car or something you're going to do. It's probably not the best time to cosign.
Yeah.
Because like you just said, that debt to income ratio will show up.
And it'll affect you.
It'll affect you, and it could affect your interest rate that you get.
It could. So can you remove yourself from a loan as a cosigner? We talked about earlier with the example of the student that we used, that 90% of students who have a parent cosign, that cosigner doesn't get released from that loan if they apply for release. There's not much you can do to remove yourself from a loan that you cosign on. So if the person isn't making the payments, you're stuck with that for the most part. The only way that you're able to be removed is to refinance the loan. So if you have a mortgage and you have a cosignee and they want off your loan, you would have to go back to that lender and you'd essentially have to refinance your loan. Now, we all know right now, if you had your home refinanced and you had that cosigner on it 2 years ago, the interest rates were really, really low and really advantageous to you. But now that cosigner wants off in the future, and now interest rates are at 7, whatever they are, and 0.5% right now. I don't know what they are offhand, but you'd have to refinance, and now you're at a different interest rate than you were before. So just really make sure that you're in it for the long haul if you want to be a cosigner or you need a cosigner, because you're stuck with it for the most part.
Yeah, and that can get sticky if you're having a conversation with your friend or your child, because that's kind of like a double whammy. Like, oh, you refinance. Well, now you're in, like you said, a different rate bracket. And then, like, I'm not here to back you up if you default on this loan.
Right. And that's another good thing to think about. We mentioned it already a little bit, but as a cosigner, always be prepared to take over that payment should that original or primary person be unable to pay that monthly bill. So you should always be able to plan that in your budget.
Yeah, and to think about things like the economy changing too. That happens just like we talked about with the interest rate, or if that person's financial situation gets worse, so on and so forth.
Yeah, just remember it's always up to the lender to decide whether you as a cosigner are able to be removed from that loan or not.
So how do I protect myself as a cosigner? We've given a lot of scary facts,
Yeah.
but now it's how do I protect myself? Well, there is no guarantee that becoming a cosigner is going to work out.
Right.
There's just no guarantee. That's the whole point of a cosigner. But if you are determined to do it, you want to know both of these things to be sure. One, that you can trust the person you are cosigning for.
Right.
With your entire heart. Pray about it.
Yeah.
And that you can make the payment.
That's right.
So if they default on it, you're able to swoop in there, and pay for the damage.
So should I cosign on a loan? Well, even though we've told you these crazy horror stories and they're real cautionary tales that you should take into consideration, most people don't believe these things will happen to them. They trust the person so much that they go through with cosigning, even though we're telling them all these things. So if you don't think these things can happen to you as a cosigner, just remember no one thought this would happen to them when they originally signed up for a cosigner, to be a cosigner on a loan. No one thinks it's going to happen to them when they start out on day one of this loan.
Right.
Right.
It's up to each person to decide if they will cosign.
Yeah.
And you should never feel forced to be a cosigner on a loan. Don't let someone gaslight you into being a cosigner loan. If you know they can't pay for it, do not put your name on it. Because like I said at the beginning of this episode, it's not just some little blessing signature you're writing on there saying, oh yeah, they totally can do it. No, this signature means I'm responsible for it just as much as they are.
Yeah. And doesn't say that there's anything wrong with the original borrower, that, no, but it's your financial health and it's your financial responsibility in the long run. So you want to make sure that you're protecting yourself.
Yes. And life happens, Jill.
Life does.
People lose their jobs. Crazy fraud happens to people. I mean, anything can happen in this world.
Yeah. So just go through this with your eyes open. I mean, you don't want to be
Absolutely.
in the dark when it comes to being unprepared and not knowing what you're getting into can just be a really disastrous situation.
Yeah.
We've talked a lot about these horror stories and given you a lot of bad examples, but we just really want to emphasize in this episode that you should just really be fully aware of what it is to be a cosigner before you jump into something you're not prepared for.
Yeah. It's not just a pretty signature on a page. It's a major responsibility that you are taking on. And we just want to make sure that you're prepared and know exactly what being a cosigner means. So
That's right.
we hope you learned a lot from this episode today. Thanks for listening to another episode of the Isn't That Rich podcast. We'll see you next week.
time.
So Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. We'll see you next week.
See you next week.